Welcome back to Ostrich Investing. It's the first day of trading in 2021, and we've got some action. Brookfield Asset Management didn't waste any time this new year. They have offered to buy out the remaining units of BPY that they don't own for $16.50 a unit, and we're going to talk about it. So by way of introduction, while the rest of us were enjoying some holiday eggnog, Bruce and his team were cooking up their first deal of 2021. A couple of BPY discussion points. We're going to review the details of the offer. We're going to talk through considerations for both BAM and BPY investors. We'll briefly touch on valuation and NAV implications, as well as potential outcomes. Disclosure, I own BAM. I do not own BPY. And disclaimer, again, this is not financial advice, so do your own homework. And if you like the content, subscribe, join along. Okay, details of the offer. You can go and read the press release yourself, but I've snipped a couple of areas here. First thing I'll point out is it's not just Brookfield Asset Management that's looking to do the take private. They're bringing in institutional partners, as is becoming standard on their deals. There's multiple stakeholders here. The value, as we talked about, is $16.50 per BPY unit. And the consideration mix, they've given some thresholds here, but you can elect to take it in cash, in Brookfield shares, or in preferred units, which will yield 8%. And then they've put some guardrails around how much cash. So maximum cash of $2.95 billion, maximum Brookfield shares of 59.5 million or 42% of the value, and a maximum of 500 million of BPY preferred units. Okay. And then if the unit holders really like the preferred units, they're happy to increase that somewhat. So I think the key here is, obviously this is a related party transaction. So an independent committee is being struck or has been struck at BPY to evaluate the bid. And for this to move forward, it is subject to a vote, a shareholder or unit holder vote, where the majority of the minority unit holders, so if you're watching this video, I don't think Brookfield Asset Management's watching this video. If you're watching this one, you need the majority of you need to vote in favor of this transaction. And a few more details here. You can see at the bottom of the release that it talks about one series of preferred shares that will be taken up at par value, but it is not proposing to acquire any of the other securities of BPY, which, there are other preferred shares that are outstanding, so it doesn't look like those will be taken up. And I guess just another point to remind us that preferred shareholders are not really preferred. That's just not the way that it works. And then another quick quote that I thought was interesting from the CFO in a Bloomberg article that came out shortly after the official release. He said, and I quote regarding BPY, we believe that it has been consistently discounted for more than just the past year. We believed it would be a premium offering to the market, given it has a unique global portfolio and some of the highest quality real estate in the world, but it has consistently struggled to trade at its NAV. And while Brookfield Property Partners traded at all-time lows in March, near the beginning of the COVID pandemic, Brookfield waited until the unit price had stabilized to push ahead with privatization efforts. So you can see he's already positioning with the independent committee that they weren't opportunistic at the COVID lows. They waited until the unit price had stabilized. And if you remember, it wasn't too long ago, they announced an SIB to help stabilize the unit price as well. So he's positioning that, hey, you're going to see the offer we've made is at a discount to the NAV from an IFRS perspective, but it's at a premium to the market, and that we waited until the unit price had stabilized. Okay, what does the market say? Well, BPY unit holders can be happy. The market's responded quite well, as you would expect. What's interesting here, BPY was up 17.5% on the day, and it's actually trading at $17 a unit, which is higher than the $16.50 proposed offer. So market is expecting / hoping for a small bump. And I think that's consistent with what we've seen BAM do, their playbook historically, where I think they've probably left a little bit of room here. Time will tell to make a small bump, but I wouldn't expect a huge bump here from the $16.50 initial offer. And what does the market say from a BAM perspective? Doesn't love it. BAM shares were down 4.5% on the news, and we'll talk about that a little bit more with other considerations. And here we go. So Brookfield Properties considerations, simply, it's a premium to the market, but a discount to IFRS. And of course, that's if you believe the IFRS value. Related party transactions. So again, here we're going to have an independent committee that's going to be struck, but clearly Brookfield Asset Management's interests are not aligned with BPY unit holders. Third, the consideration. It's a mix of cash, BAM shares, 8% coupon. And then what happens if you vote no? So here, there's really no other buyer here, unless maybe Bill Ackman's SPAC steps up to the plate. I meant to say, sorry for the typo, and it's not going to happen. If you vote no, what's really the end game here? Is it a dividend cut? The truth is Brookfield Properties is better privately held at this point, or at the very least, it's not an income vehicle. It's not a mature REIT. We know that the payout ratio is well through 100%. So on the Brookfield Asset Management side, reputation, I think, is the big one. They avoid a dividend cut at BPY. I mean, for crying out loud, BPY is acquiring their tenants. They bought JCPenney so that I guess presumably JCPenney can continue to pay the rent. And that's not to say there isn't value at BPY. I'm just joking here. But clearly, the payout ratio is completely upside down on this story. And if you look at some of the previous videos you've done, that it's super obvious. So really, the choices were do something, take this private, or you'd have to address the dividend. And that would be a potential black mark on Brookfield's reputation. Number two, it simplifies the BAM story. BPY out of plain sight. I mean, it's still there, but there's not a publicly listed trading unit price that reminds investors every day. It probably saves them some questions on the story. It's just a little bit out of plain sight. Of course, they can continue to value BPY at the IFRS NAV, and we'll talk about that in a minute. One big thing here that's important, though, for BAM shareholders is they lose the management fees. And at BPY, they were significant, in probably the hundreds of millions of dollars. And they may recoup some fees charged to the institutional partners, but likely to be a pretty big hit relative to the fees charged to BPY. And again, we'll talk about that in the NAV. So in terms of valuation, the $16.50 per unit values BPY at a little over $9 billion, which is still a 61%, not discount, it is 61% of the IFRS NAV of 15.2 billion. So the independent committee will wrestle with the premium to this sort of settled market value, as the CFO alluded to, against the discount to book value. And that's what they're really going to be wrestling with. And then from a BAM NAV perspective, this is from their supplemental disclosure in Q3. And we'll just highlight some of the areas that are going to move around. So as we talked about just previously, you can see here their annualized fee-related earnings that they capitalize at 25 times. Those are going to go down. They're going to lose some fees from BPY if this deal goes through. That might be one of the reasons why the market doesn't love it. I mean, the market may just not love the deal either, but BAM will lose some fee earnings here. Listed investments obviously going down, but of course offset by the unlisted investments. So that's net neutral. BAM ultimately here is going to maintain BPY's NAV assumptions, but the fee earnings are going to decrease. So those are the quick changes at Brookfield Asset Management. So conclusion, potential outcomes here. Bill Ackman's SPAC emerges as a new buyer. There he is over there on the right. Unlikely, I'm joking. BPY unit holders accept offer as is. BPY unit holders accept a slightly higher offer, or it's voted down and remains public. Option 2 and 3 are the most likely here. My bet's 3. I think you probably get a slight bump. That's what the market is telling you, at least that they're hoping for. From BAM's perspective, I think it's a slight positive, as this was a distraction from the story. Again, it doesn't disappear, but it's not in plain sight as it has been with the publicly traded units. From a BPY perspective, depends on your average cost base, but this is positive. I mean, I think this is about as good as you could have hoped for. The dividend wasn't cut. They basically came in and are making an offer to take the units out at a premium. Of course, that's not solace to anyone who's owned the units at higher prices for a longer period of time. But based on where we are today, I think it's a pretty positive outcome for BPY. Ultimately, and part of that is BPY could not continue as an income yield play, and something had to give. Either the dividend needed to be cut or the units taken private. BAM seems willing to make that trade-off, forego the management fees, which they're, capitalizing at 25 times in their NAV to preserve their reputation, and of course take BPY private here. There's a lot of videos. I've done a few videos, 4 or 5 on both BAM and BPY. So if you want, I'll put a link here. Check out the playlist. There's more detail on both of these companies historically, but a really interesting deal to kick off the new year. Let me know your thoughts in the comment section below. Until next time, happy investing, and don't bury your head in the sand.